good news. At least the price of oil is down. This is, I said, when things really start to spin out of control, you watch the price of oil, because that's when we're in real danger, when it just starts to go down and everything else is going out of control. This is bad news, is it not?
It's absolutely bad news, Glenn. I mean, if anybody thinks that this is something that's a reflection of some improvement in the economy, they're deluding themselves. Basically, what's happened with the price of oil is a referendum on global economic conditions. $70 a barrel for crude, which is where it's trading today, now at a 14-month low, is basically the way the oil market is saying, we think China's economy, we think India's economy, we think the whole global economic picture that looked so bright just a couple of months ago has suddenly retrenched here. And we're about to go into a worldwide global recession that began here in the United States, got exported around the globe, and is now affecting those economies in every part of the world.
And you know, when oil prices come down, it's still a lot more expensive if you don't have a job.
Yeah.
You know, so maybe the relative price of oil hasn't even come down because the price of everything on planet Earth has come down. Oil's just keeping pace with everything else.
Okay. We'll take a quick break. I want to talk to you a little bit some more about what actually happened on the stock market yesterday. And then, unfortunately, where does all of this end? Where do we go from here? How do we get control of it again? That's coming up after a break. I want to go to, well, first of all, let me welcome back our guests, Stephen Moore from the Wall Street Journal, Bob O'Brien from Barron's Online, and Peter Schiff from Euro Pacific Capital. Guys, I want to go to a hearing today that, and let me just show you a little bit of audio from Christopher Dodd on the hearings on what happened with Freddie and Fannie and this whole mess. Watch this.
Mortgage market participants, from brokers to lenders to investment banks to credit rating agencies, formed an unholy alliance conceived in greed and dedicated to exploiting millions of unsuspecting, hardworking American families seeking to own or refinance their homes. This crisis was entirely preventable. It is clear to me that greed and avarice overcame sound judgment in the marketplace, causing some very smart people to act in very stupid ways. But what makes this scandal different from others is the abject failure of regulators to adequately police the markets.
Isn't he the head of the regulators? My gosh, I cannot believe the arrogance, the gall to be able to lecture everybody and try to stay on the good side.
You know, Glenn, this is really amazing. Talk about chutzpah. I mean, here is a guy who got, remember Countrywide, he was one of the people who got the Friends of Countrywide. He got the sweetheart deals from Countrywide. He was the one who was supposed to be regulating Fannie Mae and Freddie Mac, but he got so much money from the Fannie Mae and Freddie Mac, he never blew the whistle. He never had any oversight of these agencies. I mean, this is unbelievable. I can barely restrain myself.
I know. If I hear this fact one more time that, you know, the Republicans wanted all kinds of deregulation, there hasn't been any deregulation in the financial market. In fact, the Republicans were the ones pushing for more regulation. Can we please get under control with this?
The Democrats said it ain't broke. What are we trying to do here? Fannie Mae and Freddie Mac aren't broke.
Go ahead.
The entities that needed the regulation were Fannie and Freddie because they didn't have market discipline because they had government guarantees.
Okay,
that was the one place where the government should have regulated. But these politicians were too busy cashing the contribution checks from Freddie and Fannie.
So then
they didn't care.
Peter,
Plus, loved.
Peter, let me interrupt you here because I want to take you here to some place that I don't think anybody in television will take anybody. But I think it's the destination that I keep seeing. Stephen, you just said, I'm so angry. Everybody in the audience is so damn angry. And they look at these people. We all know where the problem is. We all know, if you're paying attention at all, we know it is both George Bush and the Republicans and a lot from the Democrats. Hang on just a second. So they're, Peter, they're the disease. They're the cancer. So how the hell do we cure the body here if we've got the disease in control?
We can't. You know, the cancer is getting bigger and bigger and bigger, and, you know, the sicker we get, the bigger it grows. But the one thing the government has to realize is if they kill the host, the cancer is going to die too. If they can't, there's nothing left to tax, then these politicians are going to be out of work. But, I mean, the reason that it was obvious to a lot of people years ago that there was a problem here is because we understood the effects of government regulation and moral hazards on the market, yet these politicians had every opportunity to stop this reckless lending, but they didn't want to rain on everybody's parade. They didn't want to tell their constituents that they weren't going to get rich living in houses. They didn't want to tell people that you can't buy a house without money. And so they let it go and go.
It's worse than that. They were facilitating this. I mean, without Fannie Mae and Freddie Mac, you wouldn't have had the subprime lending crisis. And you know what, Glenn? I think I'd love somebody like you to basically start a campaign for these politicians to give that money back to the taxpayers that they took from Fannie and Freddie PACs. It's outrageous. They still have this pile of money in their campaign chest.
You know
it came from the taxpayers.
I mean, I can't.
I have an op-ed on this subject.
People are angry, and unless Congress and our president and the new president, whoever he may be, unless these damn Democrats start policing the Democrats and the Republicans start policing the Republicans and kick the bad guys out of there, the country is going to snap in half.
Yeah, Glenn, I'd also love to see somebody try to police CEOs and CEO compensation. I mean, one of the problems we had with the whole mortgage crisis was we had a program that basically incented people who worked for either mortgage companies or for lenders to do whatever they could to artificially inflate profit statements, lift their stock price, and capture the compensation.
You know what? Tell me if I'm wrong.
That's the fault of the boards. That's the fault of some of the larger shareholders that are managing other people's money.
But now there's an opportunity. We are inserting a government in a role in these financial services companies. That could be a quid pro quo for the handouts.
Bob, who's the one? Why is it that the shareholders never really knew exactly how anybody was getting paid? Why were these giant bonuses? It's my understanding it's because the government inserted themselves and said, well, now wait a minute, hold on just a second, and so they had to find different ways to pay people, and so they found a lot of it became all kinds of convoluted,
Glenn,
right or wrong.
A lot of it has to do with, I think, the way people on Wall Street were compensated. A lot of the people who were managing funds, everybody was geared in on short-term performance, from the managers of the company to the managers of the money. And as long as short-term performance was being goosed by all this, nobody cared, because nobody was looking at long-term performance, because nobody was running their own money.
So, Stephen,
and this is something that the market is going to purge from the economy if the government stays out.
The government's not going to stay. I mean, look,
well,
Stephen,
unfortunately,
here's where I want to take you, Stephen, and help me out on this one. FDR, he came up with the FDIC, okay? So a bank fails, and this is just to provide security. Bank fails, what happens? The government absorbs it, they pay out, but then they shut the bank down.
Right.
We're not doing that anymore. The government's just absorbing it, paying out, and then rewarding the bad behavior by allowing that bank to stay. How does capitalism work without any failure?
Well, good point. And the people, I just gave a speech yesterday to the Community Bankers Association. They're enraged too, because those are actually healthy banks. They're the banks in Dubuque, Iowa, and Newcastle, Indiana. And they say, wait a minute, we have to compete against these big banks that now have this huge safety net and pipeline into the federal treasury. Where's the fairness in that?
Okay. And the big problem is the moral hazard. Whenever the government does that, whenever the government says, don't worry, put your money in any bank and it's insured, nobody cares about the risks that the bankers are taking with their deposits.
Guys, thanks a lot. We're gonna take